Well, hi everyone, welcome to the Buffett and Beyond Weekly ETF video letter for Saturday, June 10th, 2023, and we're going over the XRT ETF, which is the retail ETF, and you're going to see some surprising things right here, folks. But remember, if you want to live on this beach like Jimmy Buffett, you've got to learn how to invest even better than Warren Buffett. And let us look at the XRT, and yeah, it's down, 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 down. But we've seen something since this bottom in here. We went along and made a lower low. And here's something that you want to look very careful at. With the market making a lower low, and I'm talking about this ETF, the XRT ETF, the retail ETF, this indicator made actually a higher low. So when you make a higher low in the indicator and a lower low in the index or stock or ETF, then that's called a bullish divergence. And since we got this little signal up here, which was bullish, we look at this over here as the market went lower, and this is short term. The market went lower short term. This part of the indicator did not drop below this level over here. So that gives us a possible buy. We don't like to see this point lower than this point or even with it. We like to see it above it, but it was even, did not go below it, and so that gave us a slight bullish signal also. Also, these gray lines in here, the vertical lines, the gray lines, we have more up days than we have down days. So this market or this ETF is coming off a bottom that may be sustainable. Now, right in here, we are up against this red line, which is the 200-day moving average, and you know at the 200-day, you're going to get a lot of resistance. And yes, we had the resistance right back here. Look at this, that double top in there. Not fun at all. So anyway, that's where we are right now. And what the market is waiting for is the Fed meeting, and we'll see what happens. But let's look at the 5 stocks in our XRT ETF. Now remember our theory. Our theory is that we can pick the best stocks using the clean surplus return on equity, and that's a different type of return on equity than the traditional accounting return on equity. When we have an index or an ETF, even a mutual fund, when we, rather than buying the entire index, ETF, or mutual fund, if we buy the top 5 or 6 stocks in those indices, then we will usually almost always outperform the ETF or the index itself. That's why our growth portfolio is so successful over the past 22 years. And that's why the ETF research that we have done in the actual portfolios are outperforming. Don't forget, last week we went over what? The semiconductor ETF, which is up, 65% this year alone? Oh my gosh, I mean, that's our best portfolio I think we've ever had. And what about the tech ETF? The top 5 stocks in our tech ETF are up 45% as of last week. So yeah, we're doing real well. Let us look at the top stocks in this retail ETF. And here we are. And you know all these names: Tractor Supply, BJ's Wholesale, Amazon, Etsy, Dick's Sporting Goods. And folks, by the way, 4 out of 5 of these stocks are in our growth portfolio, and we've been adding or suggesting to the money managers and registered investment advisors that are following our recommendations that it's time to put Tractor Supply in there also. So let's look at from the end of 2022 on the 30th, the closing prices, and up to intraday, which is Friday that I'm recording this, intraday. Here's the prices. The S&P is up 11.9%, doing pretty nice so far this year. But don't forget, it's coming off a bottom. It should be doing better than that. Anyway, we'll see. The XRT is up a mere 2.1%. The top 5 stocks in this ETF are up 5.4%. In other words, they're doubling the XRT. But after the numbers I just told you about our growth portfolio, which I didn't mention, up over 30% year to date. The semiconductor top 5 stocks up about 65%. The tech top 5 stocks up 45%. This 5.4% doesn't make us warm and fuzzy, does it? But let's look at some other things right now. Let us look at year to date. So this is the year to date, and these are the 5 stocks that we just talked about. Black line is the S&P 500, and we can see that Amazon is the top performing stock. But hold on to that thought. Etsy is the worst performing stock year to date. And right in the middle, we have Dick's, which is doing as well as the S&P 500. We have Tractor Supply right here in brown, and then we have BJ's right here in blue. So that's year to date. All right, we already know that the XRT is not doing that well. In other words, retail is slowing down. And so people are looking at the stocks in this area. Dollar General really got hit, what was it, this past week or late last week. So a lot of these stocks are falling off because people are just not shopping as much. What are they doing? They're going out and they're getting on an airplane and they're going on vacations, but they're not buying stuff. So that's why this ETF, the retail ETF, is not performing very well. Now, let's look over the 5 years of our 5 stocks relative to the S&P 500. This is 5 years now. Same stocks over here. Now, we look at the black line, it's the S&P 500. What is this line under here? Amazon. Now, this is very, very surprising. That's why I told you to hold on to that other thought before about Amazon performing this year, because it's coming off a low, because it was really sold off. Over 5 years, it's performing as well as the S&P 500. Maybe had not 2002 occur and the market selling off the big stocks, maybe this would still be ahead of the S&P 500. But this is something to keep in mind. But look at our other 4 stocks. Look at Dick's. Look at Etsy. Look at BJ's. Look at Tractor Supply. They are up to, on an average, 225%. Folks, the market is up about 50% over the past 5 years. And these stocks are up 250%. That's 5 times more than the average stock. The only thing holding us back a little bit is Amazon. But Amazon is not dead by any means, folks. It's got what? Almost 3 billion people looking at it on a monthly basis. 3 billion. Yeah, that's what the B. It's a lot of people, folks. It's almost half the world population. Now, let's look at the five years versus the XRT. And the XRT is now the black line instead of the S&P. And boy, it looks the same, doesn't it? The XRT is less than 50%. It's up about 25%. And these stocks are up on average 250%, or 220% really. So these 4 stocks that we have, and let's count Amazon. Amazon is not a bad stock, folks. Remember that. So we have 5 stocks here that may wind up performing very well as we go forward. Let us look at the XRT versus the S&P 500 over 4 years, and we can see that the S&P actually outperforms the retail ETF over 5 years. But if we look at our stocks again, we can see, wow, they really outperform. So in other words, if you buy the best stocks in an ETF, you are very, very, very likely to outperform that ETF, and not by a little bit, but by a lot. So once again, let us look at where this ETF was. So these are the candlesticks of the retail ETF, and we can see this bottom in here, or this, I should say, this divergence in here, thinking that we just may be having a bottom in here. And I think once we break through this 200-day moving average, we might have a nice rally on our hands as we come out of this recession, or whatever you want to call it, depending whether you're looking at JP Morgan or you're looking at what Morgan Stanley says, and they're on opposite ends. That's why I picked those 2. So anyway, we have stocks in here, but I'll tell you what, folks, we have been telling money managers, since we already have these stocks in suggested portfolios, that they should be adding a little bit more because they are lower in here. The whole XRT is lower. So you got some extra money, you add to Dick's, you add to Etsy, you add to Amazon, you add to BJ's, you add to Tractor Supply. In fact, we're just suggesting Tractor Supply recently over the past couple of months. So we have some good stocks here. We have a lousy ETF. Well, it's retail. Just hasn't been doing good so far, folks, or for this year anyway. But over 5 years, if you pick the top 5 stocks of this ETF, you would have been way outperforming the ETF itself. And here it is again. Here's those 5 stocks with the 4 Dick's, Etsy, BJ's, and Tractor Supply totally by 500% outperforming the ETF itself. That's very, very good, folks, just in case you didn't realize it. Those are good numbers. So, folks, we had a pretty good week. We're waiting for the Fed next week. We'll see what happens. We're at overbought in the market, so the market movement is going to all depend on what the Fed does on Wednesday, and I believe it's at 2:30 p.m. on Wednesday. Fed Chief Powell speaks and tells us his thoughts, whether they're pausing, whether they're going to keep raising, and what the inflation numbers mean to them and what the thinking is of the Federal Reserve as of Wednesday. So, folks, you go out, forget about the market, have a great weekend, be with your loved ones, watch television, go for a walk, go for a swim, whatever you do, enjoy yourself, because Monday the market will be here, folks, so will we. We'll see you then. Have a great weekend.